Hello, everyone. Take a moment, look at the disclaimer. This content is educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, hold any securities at any time. We are here just to spread the word of how BTA analyzes the market, how we looks at the market, and nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we're not going to get out at the exact top, but we are going to make a lot of money in the middle. Now, we're going to pick it up with the SPY. Okay, we're going to pick up where we left off on the previous video, and we're discussing the Bollinger Band stochastic RSI MACD strategy on the weekly chart, our weekly Bollinger Band RSI stochastic MACD strategy. So we already looked at the DIA and the Qs. So here now we have a weekly chart of the SPY. Okay, we have a weekly chart of the SPY here. And once again, just like with the DIA and the QQQ, we have completed the setup week. And this week that just passed was our signal week. Okay, so this is a weekly chart of the SPY with the Bollinger Band up top, the RSI here, the stochastic here with the MACD here. Okay, so now if you notice, all right, once again, this signal week, the spread is very large. Okay, so the spread is very large. We're going to get to that in a few minutes, but let's look at the RSI just to complete this. We had our setup week. We had our signal week. Now this week coming up tomorrow, okay, which is Tuesday. I'm recording now on Monday, 5/30/22, May the 30th, 2022. So tomorrow the market, we have a holiday today, so the market is closed. Tomorrow, when the market opens, we're going to be starting our pivot week. Okay, this is going to be our pivot week, the start of the pivot week. So now we already have the RSI. It did get below 30, and it got back above 30 and is moving upward. The stochastic got below 20. We have a bullish crossover right here, right? And now the stochastic is back above 25. The Bollinger Band, it came out, it closed below the lower Bollinger Band. Now it closed back inside of the lower Bollinger Band. So everything is set up now. For our pivot week. Okay. Now, this week, the signal week, once again, like I said, it was very wide. We had our follow-through day during the week, and it caused the prices to surge and caused that signal week to be very wide. So the spread between the low and the close, actually, because we closed almost on the high, the spread for the SPY, okay, is $28.30. That's a wide spread. We don't want to take a $28 loss going back to our second stop. Okay, that's too much. That's too wide. That's too large of a loss. We want to keep our losses very small. We want to use proper money management, keep them very small, and manage our losses carefully. Okay, so this spread is too wide. So we don't want to use that, because remember now, when we get in on our pivot week, right? What our trading plan says, and we get on the pivot week, then we're going to be using the low of the signal week. We're going to be using the low of the signal week as our stop loss, our second stop. That's down here at 386.96. Okay, that's down at 386.96. If we go in on the pivot point, from the pivot point to that low, it's going to be a $28 stop loss. $28.30 will be where will be our loss, and that's going to be our stop loss. The spread is too wide. Okay, we don't want to do that. All right. So once again, what we are going to do, is drop down to the daily chart and use the daily 21-day moving average as our new stop loss, second stop loss on a closing basis, instead of the low okay, the signal week. Now, there's a couple of things we want to look out for before we go to the daily chart. On this weekly chart, okay, on this weekly chart uh, of the SPY, what we need to see, once again, we need to see this RSI get above this 50 level. Okay, we need to see prices continue to move up, but we need to see that RSI get above 50, find support, and try to get back and get above 70 and start at least move towards 70, which would be the overbought area. We need to see that. We want to see overbought. We want to see an overbought condition because that's telling us that the momentum is to the upside. We're long. We want to see the momentum coming in. So we need to see this RSI get above 50. We don't want to see it get to 50 and get rejected. Okay. We need to see it get above 50, and then we want to see it get above 60, okay, and then move on upward to the 70 level. So this is one of the things we got to look out for, this RSI getting above 50, and we want to see the price get above the middle Bollinger Band. We need to see that. We went over that when we looked at the DIA and the QQQs chart in the previous video. Go back and look at that video on the Bollinger Band stochastic MACD strategy for the DIA and the QQQ. It has the same condition. We need to see this work out the same way for the SPY. So we need to see prices get back above the middle Bollinger Band. All right. So now let's go and look at the SPY on the daily chart. Once again, this is a daily chart of lowest with the 21-day moving average on there. Now look at Lois. Lois is gonna. I'm telling you. I keep telling y'all. Lois is gonna lead you to success. We cannot lose with the stuff that Lois used. I'm telling you. Look at Lois. When the magenta line get above price, look at price falling apart. It tried to rally up, hit the 21-day moving average, turn red again. Tried to rally up, hit the 21-day moving average. The magenta line got above prices, and look at prices falling apart. Okay? Look, Lois is going to keep you on the right side of the trade. Lois turned bullish, gave us our bullish upswing signal. Okay? 4 days before, we got the follow there, and we broke out above the middle of this double bottom pattern. So Lois would have got us in a lot earlier, but we wanted to wait and see if we were going to get above the 21-day moving average and get above the middle of this double bottom. But Lois will lead you to success. Now, here's the 21-day moving average, okay? The 21-day moving average, all right, for the SPY is at 404.95. So from the pivot point to the 21-day moving average on a closing basis, that's $9.32. That's still a pretty wide stop. That's still a pretty wide stop. $9. Okay, that's a pretty decent sized loss. All right, but that's a lot less than the $28.30, which would have been the low of the signal week. So we had to reduce that. We don't want to take a $28 loss. We don't want to take a $10 loss. But we know it's a possibility that we can take some losses. So we want to manage those losses very carefully and keep small losses. All right. So $9.32 will be our second stop loss. Well, the spread from the pivot point to the second stop loss will be $9.32. So we're going to use the 21-day moving average on a closing basis for the SPY on the daily chart, as our second stop loss. Look, we're going to follow our trading plan for this strategy, Bollinger Band, Weekly Bollinger Band, RSI, stochastic MACD strategy. We're going to follow our trading plan for that. But we have modified it a little bit, and it's in our trading plan that we're going to, if the spread turns out to be at so wide because of some really strong surges upward in price, okay, and that signal week has a really wide spread, then we're going to drop down to the daily chart, 21-day moving average, and use that as our second stop loss on a closing basis, right? As our second stop loss on a closing basis. So now let's take a look at the let's take a look at the IWM. Let's take a look at the IWM. So right here we have a weekly chart of the IWM with the strategy on there. Up top we have, of course, again, the Bollinger Band. We have an RSI right here. We have our stochastic right here. Here's the MACD. Okay, so we completed the setup week. We completed the signal week last week. And this week, tomorrow, when the market's open, we're going to be starting the pivot week. Okay, we're going to be starting the pivot week. Now, once again, the spread, okay, is a little wide. All right. All of them was a little wide because we had the follow through day and prices surged with the follow through day. Okay. So if we look at from where the prices closed on the signal week, and once again, it closed almost at the very top. So it's almost like it's the top of the weekly price bar. Okay. So we closed, okay, with the IWM at 187.64, but the low of the signal week, okay, the low of the signal week, which is right here, that was down at 172.33. Okay, so if we use the low of the signal week as our second stop loss, okay, then we're going to have a $15 spread from our pivot point, $15.31 spread from our pivot point to our second stop loss. All right, we don't want to take that $15 loss, of course not, as our second stop loss. The spread is too wide. The $15 loss is too much. That's way more than what we want to take, okay? So we're going to adjust that by also going down to the 21-day moving average on the daily chart and use that as our second stop loss. Now, here's the RSI. Once again, the RSI got below 30, recycled, got back above 30, and is heading toward the 50 level. Once again, we want to see that price. We want to see that RSI get above 50, find some support, and start moving upward and try to get back above, get to 70, which would be our oversold level. So we want to see that. Okay, we want to see that. Our stochastic gave us a bullish crossover and is back above 20. It's at 26.98. And once again, the MACD has not given us the signal yet, but we know this is going to be a little slower because it's a little slower than the RSI and the stochastic. But we're going to be looking for over the next couple of days and weeks that bullish crossover where the MACD give us a bullish crossover on the MACD and the histogram start turning to green. Okay, that's what we're going to be looking for in the next couple of days and weeks. All right, but now once again, the price bar, the price chart, the price bar, the price movement. We want to see price get above the middle Bollinger Band. All right, we need to see that. You see, it can get rejected there and start turning back down. And same as we can get to the 50 level on the RSI and get rejected. You see price start going down. We can start getting some downward momentum. We don't want to see that. So if this relief rally is to hold and continue to move upward, okay, then we need to see price get above the 50 level. We need to see the RSI get above 50 level, find support, and we need to see price get above the middle of the weekly Bollinger Band. We have to see that, okay? We have to see that. So now let's do this. Let's drop now. Please don't forget, look at the other videos that we discussed, we talked about in our other previous videos, that the ETFs, they're coming up against some very strong weekly and daily resistance levels that we have to get above. We're coming into some serious resistance. Not only are you seeing it here on the Bollinger Band, where we're coming up against the middle of the Bollinger Band here, okay, and we have to get above 50. Yeah, we're talking about all that. But go back to the other videos, and we talked about weekly moving averages. That was key resistance areas. That could be areas of interest where we could get rejected and turned down. We talked about key levels and moving averages on the daily charts, okay, for the major market indexes and ETFs that we could get rejected at. You got to go back and look at those videos. I'll be posting those videos all week, okay? Because we're going to be monitoring this very closely, daily, every day, okay? So every day we're going to be posting updates on this. But I'm just saying, just in case we get rejected, all right? I don't want anybody to say we didn't say it. We got to be careful because this rally may not hold. It may collapse and go back down. But if it is the hold and we get a nice tradable relief rally, then these are some of the things that are areas of interest that we got to keep an eye on. So now let's look at the IWM here on with the chart of lowest with the 21-day moving average on it, okay? With the 21-day moving average on it. So now, if you notice, of course, you see lowest, all right, with the magenta line above price, saying we got a downswing, and the blue lines above price, saying we headed for an upswing. But here's the 21-day moving average right here, 21-day moving average, and it's at 182.02, 182.02. So from the pivot point on the weekly chart, from the pivot point to the 21-day moving average, if we use that as our second stop on a closing basis, then now the spread is $5.62. That's a lot more manageable, okay, than the $15.31, okay, if we were to use the low of the signal week as our second stop. So we're going to be using the 21-day moving average on the daily chart, 21-day moving average as our second stop loss on a closing basis, okay? And that'll bring us down to a $5.62 possible loss, okay, for our second stop loss. A lot more manageable. Look at the MACD, okay, on the daily chart has given us a bullish crossover, and the histogram is starting to expand. The MACD line is moving up. Hopefully the MACD line can get above zero. That's showing a lot stronger momentum. That tells us the 12 and the 26-day moving averages has now given us a bullish crossover on the chart itself. Well, if you want to understand how the MACD works in full, well, go to browntradingacademy.com, and we got a whole lesson on the MACD and how we trade it. And actually, one of the strategies that we use with the MACD, I think is like 68% accurate. Okay, have a hit rate, a win rate of over 60%. See, we only use indicators that work, that has been proven, not for a day, a month, a week, or 2 years, for over 100 years. Some of our indicators goes back 40, 50 years. Some of our trading techniques go back over 100 years. We only use the best. So we're going to use the 21-day moving average for the IWM and for the DIA and the SPY and the QQQ, the 21-day moving average as our stop loss on a closing basis. Okay, so now we're going to stop and we're going to pick it up with the ITOT. Okay, we're going to go over the ITOT for the final ETF that we're going to analyze for the weekly Bollinger Band strategy. So look out for the next video, which is going to be the ITOT. It's not going to be long. It's going to be very short. So we're just going to look at the weekly Bollinger Band, and then we're going to drop right down to the daily chart to see where the 21-day moving average is at, so we can identify that as our stop loss for the second stop of our trading plan for this strategy. Okay, our second stop for this trading plan for this strategy as it will be the 21-day moving average. So we're going to look at the ITOT next. The ITOT. So please look out for the next video.